Morning, everyone. Welcome to this morning's edition of the MPC Markets Morning Call. I'm Mark Gardner. It is the 11th of June. Our very hot stock market in the US got burned by even hotter inflation overnight. Not to mention that oil surged. Trump struck Iran for the second day in a row, and just after the market shut, they announced further strikes as well. So we've had a fairly decent slide in the stocks, down 3.6%, down nearly 14.5% for the week. Qualcomm, ARM, Marvell, top decliners on the Nasdaq, and Nvidia even dropped down around about 3.8% as well. So you can see there on the heat map, it's those stocks all there on the left-hand side. The Google's done an equity raise for data center. And this has really sort of struck fears, from a lot of investors in terms of, how far this is going, that's really started to put pressure on Nvidia as well, because obviously they are selling into this as well, and we've had Oracle report in the after hours as well, and their AI spending exceeded their 2026 forecasts. And that's just raising further concerns around their debt. They're down 10% in the aftermarket as well. So further bad news there. Overall, the green sectors are more that you can see on the screen there, which are fairly scattered, mainly the defensive names. The likes of, the energy names are up obviously on the back of oil, but the likes of Walmart, Costco, Philip Morris, etc., and Coca-Cola, but we're obviously seeing a fair bit of heat come out of the market. Those cyclical names like Caterpillar, GEV, all getting hit there. And this all started, it was on the back of inflation numbers, and you can sort of see that the technicals are turning here at the moment. We had a bit of a rebound on the Aussie yesterday, but we sort of had that precursor in the previous day. But we've now got pretty much sell signals, or at best a neutral signal, and ranging to sell or strong sell signals across all the dailies now. We've got a weekly sell signal in the Aussie market as well. So I don't know. Look, we've got a fair bit of mining. Gold was absolutely smacked overnight as well, because we're obviously now everyone is expecting the Fed, after these inflation numbers, to not only remove the easing bias, but potentially start flagging rate hikes towards the end of the year. High yields is not good generally for precious metals, because precious metals don't yield. But I think overall, where this inflation pressure is coming from, is going to be, which is energy. It will decline, but it really is going to hit the consumer's back pocket. So I do see, I do see these expectations of inflation rising, and being very sticky. We had energy up 23.5 year on year, gasoline up 40.5 year on year. They accounted for over 60% of the monthly CPI increase. So look, if that is the concern, and we do get a resolution here in this Iran conflict, then we could very quickly turn to having concerns over the economy, because the consumer won't be spending. We'll be coming towards towards or past peak capex in the AI and data center sector, which has been driving most of the economic growth. So there is a real case that it's going to dent the consumer, dent the economy. These investor concerns around capex might start to see the hyperscalers slow it up a little bit. If there are increasing concerns around data cost, capital raises, those hyperscalers are going to have to start to pay more. If the revenue is not coming in, they might start to scale back those expectations a little bit. So look, I tend to think that a rate hike by the end of the year will be a little bit overkill. I think the horse will have bolted by then. But the general thought is around Iran that they're essentially, there's a peace deal on the table that should really be accepted. But Iran's plan is to make sure that this is drawn out until the midterm elections, so Trump is heavily damaged by this. So Trump said he'd be the first person in the history of the world to actually say this, because I don't think anyone has ever said this ever. He said he loved inflation last night, and and it was the single most bizarre thing. I think everyone around him, including the person he was holding the press conference with, just looked baffled. Because that quote literally said, like, that is said no one ever. I don't know. Yeah, I mean, and then, but he also went on to say that there was a secret mission in the last couple of weeks that's seen them, their ships go dark, and then they've managed to smuggle millions of barrels of oil through the Strait of Hormuz. Yet again, just categorically unverified, that comment. Well, I think we probably need to keep a very close eye on reserves, obviously, as well, and if gas prices just continue to go higher. So that summer driving period, where people tend to go on holidays in the States, is obviously 40.5% more expensive than last year, and that is going to really hit the general economy. No one's going to be traveling, no one's going to be spending money, etc., etc. So these really cyclical commodities here, as you can see, like gold down 10 for the week, or 9, silver down nearly 15, uranium down 15, lithium down 9, platinum down 12. I think overall, that's really, as you saw from the heat map, that all those cyclicals being hit. I think they're predicting, slowing economic growth. I think if they can get to some sort of resolution here, obviously that stagflationary concerns go away, and then I think you might see that rate, the rate thing readjust. But at this point in time, I think I basically going back to high levels of cash is definitely the smartest thing to do. You can see this come back up here. I mean, these inflation on this chart here, all items excluding food and energy back there in 2022 were all off the back of the market being flooded with extra capital and COVID. I don't see it getting anywhere near back up there. But the fact of the matter is, 4.2 is definitely much higher than the 2 to 3 band, or the 2% sort of target for the excluding food and energy that the Fed's got. So poor old Kevin Walsh. We've got a Fed meeting next week. It's a fun first press conference, I would say, overall. So we did. Treasury's only rallied about 3 or 4 basis points, but I mean, look, they've been pricing this in forever, and the equity market's been ignoring it. So basically, I mean, to put this in sort of more layman's terms, or regular life context, if you're at a party, the bonds left early, everyone else left on time. The equity markets is that friend that has been hanging around drinking, till 4 a.m, and they're about to probably get a very large hangover. So, and that Oracle thing particularly, and then look, Adobe's got earnings tomorrow. Analysts are super negative on Adobe overall, and I can't say there being a positive surprise there, despite the company having largely decent fundamentals. Every time they've reported positive and better than expected, they've been whacked anyway. So, unfortunately, when sentiment rules, there's not much you can do, because the fundamentals in markets these days do not help you when sentiment overrides like that, and there's no momentum, or the momentum's to the downside. We have PPI out tonight as well. I can't imagine. Well, we had 6% last month. There's usually a 2-month lag of that sort of filtering through into the CPI inflation numbers. If PPI is high tonight, we're in trouble. We're in, I would say we're in a lot of trouble. We're about 4% off the highs in this midterm year, elections in this period. Minimum 10% down, average 17%. I personally think we've got probably 50. I think we'll hit a bear market at some stage in the next sort of 3 to 4 months, because these inflation numbers have zero reason to go backwards. If anything, they will probably head higher for the next 2 to 3, and particularly because they're lagging, and it's going to hurt. So, and for even putting obviously Kevin Walsh on the Fed, he's only one vote, he's the chairman still, but there's no way they can dice this up to have any form of easing bias. and all they're going to create is higher bond yields, and the government debt, which is because of the big beautiful bill spiraling out of control. The US government can't afford it either. So yeah, it's the equity markets in the US particularly leaning into this everything's going to be fine crap basically for the last 3 or 4 months is really just lined this market up for for a potential whacking overall, because whilst you can ignore certain things in the economy, you can't ignore them over a 6 to 12 month period, and unfortunately it's just going to start to catch up with this. So and then we've got SpaceX Friday night. From an institutional level, apparently there's not a lot of it. It's 4 times oversubscribed, but not by institutions. I was listening to something this morning. They were saying essentially that if you're an institution and you haven't bought in already, there is a 0 chance you're buying in on this float. Elon's got a thing in there for the employee shares, and as well that they're held in escrow and for a certain period, but if they go above 30% above the IPO price, then people are allowed to sell. So look, that ceiling on prices where you're going to see some people just cashing in some of their shares is going to be a very hard one to break through, I would imagine. And after its inclusion in the Nasdaq, and which happens after 7 days, is probably going to have more of a negative effect on the other 99 stocks in the Nasdaq 100 than adding SpaceX in his. So there's quite a few bearish insto and hedge fund guys who are very reputable in the States, calling while retail's very excited about it, they've labelled it, the insto's labelled it the IPO of hopes and dreams, because that's pretty much what you're buying at the moment. I personally like it, but not at the IPO price. I like it probably maybe somewhere around the trillion valuation or 50 times sales, because it's going to be a massive industry moving forward, but not a chance in hell at 100 times sales or 100 times revenue. Everyone calls Tesla expensive at 14 times sales. 100 times sales is just, for something that no one's proven yet. The timelines are going to be variable. It certainly is not going to run ahead of schedule, because you've got some of the rosiest timelines in history in some of this stuff that any independent researcher out there outside of SpaceX has basically said it'll take at least double. And anyone who's bought Tesla, who has bought it on the back of the Tesla semis, the Tesla Cybertruck, just remember that pain when Elon, who did deliver in the end, delivered 5, maybe 6, and up to 9 years too late. Well, not too late, but late. So, and then apply that to rockets and building a base on the moon and God knows whatever else, which is going to require the Optimus robots, which still haven't been released either. I mean, there's a huge amount of what ifs there, and So look, it's the most exciting IPO that we're probably ever going to see in our lifetime. It's the most exciting IPO. But be sensible. If you want to be involved, chuck a couple of grand at it. Don't throw the kitchen sink at it, and then maybe just be a little bit patient, because there's going to be rockets blow up. There's going to be projects delayed. There's not going to be the revenue, or the TAM that everyone's banding around is based on the total space industry and related. Really, the space industry is only 1.8. That AI part of the business is losing a hell of a lot of money, so you will get another opportunity. But yeah, and look, we had our webinar this week, our sequel to the Software Survivors from back in March. And you don't have to register. Well, you can register it and you scan that. You can get on the you can get onto the page and just register. You'll be sent the webinar on demand now. So myself and Kai Chen, Kai Chen brought the knowledge, and I just brought the questions and the presents. But pretty interesting sort of review, and we will do another couple of these over the course of time, because the new release of Anthropic's model this week, which burns tokens like a bonfire, it does show signs of doing some really cool things. Just be wary out there on social media, though, folks. There is loads and loads of false claims going on around Anthropic. Someone dropped, an investing model that was built in 48 hours. They probably should have scheduled that post because they released it 6 hours after it was released, claiming that they've essentially modeled, one of the best Citadel's fund management thing and made it work in straight away. So the social media claims that are going on out there at the moment, just be very, very careful. If you're on Grok, just go into the comments and go @Grok, verify, and it'll tell you what is actually going on, because there's a whole lot of horse crap out there, and you might you don't want to fall into what it can and can't do, or have a view of what it can and can't do. And that's what we talk a lot about in the Software Survivors, is that a lot of the claims are not necessarily the truth for some of these software companies. But but do us a favor, whatever platform you're on, YouTube, Spotify, Apple Podcasts. We've got 2 podcasts, the Morning Call and our weekly Bulls versus Bears with myself, Jonathan Takadina, and Kai Chen as well. Bit of an informal chat around it. Go to @NPC Markets, go and find us there and subscribe if you can. That really helps us out. But other than that, guys, ASX this morning, a fair bit of bad news for the banks. Just to finish off. So Westpac has seen their investor home loan applications drop 20% in the last 3 weeks since the budget. And Westpac's forecasting Sydney house prices to drop and Melbourne to drop 4% this year, and up to 10% nationally. And there was a big story yesterday about hedge funds in Australia have an $11 billion short position in the in the ASX banks, and they had 4 or 5 of them there, and they're looking, and they're very open about they are looking to double their short positions in the big 4 and the banking sector here, because as we've been saying forever, they're building societies dressed up as banks at the end of the day, and any bad news for the property market's going to be bad news for those guys. So anyway, people, I'll let you get on with your day, and we'll speak again tomorrow.